If you've been sitting on the sidelines in 2023 because you got scared, maybe you got it handed to you a little bit like we did. Today's podcast, we're going to share with you some momentum movers, some accountability to growing your passive income at least 25% in 2024. Now, technically, Stallion, we can't help them grow their own passive income 25%, but we're going to talk about how we're going to do it and the things that we messed up. Is that
That's
correct?
right. Well, and let me be honest. I was vying for 24% increase in 2024 just to make it simple. But I'm okay if we round it up. I'm good. Like, let's go for 25.
Well, the key here is that we have to learn how to become a better investor.
No
And
doubt.
we made some mistakes this past year, bro. I'm just looking back at some of the things that we did not do, and the things that we did do, right? Here's a
Yeah.
couple of things that we did that did not result. Like we did a JV deal, right? In the land space that has produced to date no income.
Yeah. Yeah. That would be no income coming back towards us. Yes.
Yeah. We bought some cars and did the Turo deal. And for me, I had no income.
Now, hey, lesson learned. I didn't buy a car. I just gave my existing car over to an operator who has produced some income. We're gonna cover that today.
So I also, you and I got into, we bought an ice maker, like not one that goes in your house, but one of those huge things that spits out bags of ice. And right now it's produced no income because we still don't even have it in front of a store yet. It's like we're still trying to search for a location. Maybe not a great idea.
Yeah, location is important, by the way. Ice has to be where people want to buy ice.
Yeah. Another thing that we that we did that didn't work out so well is that we took crypto that we had been making in the last 3 or 4 years and we put it into BlockFi that went bankrupt.
Mm.
That didn't work out so well.
I do not recommend. Do not recommend.
We also, against our better judgment, invested in a deal that ended up becoming, or was, they didn't become, I think it was always a Ponzi scheme. It was a fraud, a sham.
And by the way, just so you know, at the end of 2022, we made that investment thinking that was going to add almost $80,000 to our income for our passive income report. And instead, we lost all that money and went backwards. So
I think
that's a
we
big
also
lesson learned.
we lost momentum, right? We lost probably. I think a part of that process is the thing I think we did well. Maybe is that we were actually just stacking cash. We bought 3 insurance policies, but I mean, it didn't produce a passive income for us.
Well, but here's the deal, Russ. I don't want you to poo-poo that idea because you're listening right now from wherever you're at, and you may have been stuck in the same kind of thought process that Russ and I were. I'm not really sure where to invest. I'm kind of waiting to see what the market's going to bring. All these interest rates are going crazy. Like, I don't know what to do. So I just sit on cash. But what we chose to do, Russ, I think this is a big win, is we looked for ways to put our cash in the best location while we waited. And for us, that was buying existing insurance policies that are already very profitable on their own. So I don't think you should poo-poo that, man.
Well, I get that. But I want to see some movement, man. Like if you're watching this on YouTube right now, you can see that we're sharing our passive income report. And this is looking back at November of 2023. And we put, almost 39,000 on the board, but that's just if we're looking at where we're tracking right now. So far in 2023, we've done 537,000 net income in our passive income operations. And at this pace, we will have about a 5.5% growth over 2022. I want to talk about how do we go from 5% growth this year to 25% in 2024. If you're interested in some of the things that we're doing, some of the ideas and things and frameworks that you might be able to apply in your world, stay with us as we jump into it right now. All right,
Great.
let's do this. Okay, Stallion, let's talk about the calculated steps we're going to take moving forward as we think through investing decisions and what those investing criteria are for us. I'd love to talk about a strategy that we're employing that maybe you, as you're listening to this, maybe you're like, hey, I might be able to do that because I have some of these things that are needed to do it. And then lastly, I'd love for us to, we kind of started off the intro talking a lot about things that didn't go right, but we did have some wins. Let's talk about some of those wins and also some of those exciting things that we have that are going to propel us forward to hitting that 25% goal for ourselves in 2024. You good with that?
I'm good, man. Let's do it.
All right. So talk to me about the criteria. Everyone who interviews us always loves to ask us the question, where are you guys investing? And before we answer that, we always say, well, it has to be based upon your investor DNA. It has to be based upon the investor buy box that you've created for yourself. So for you and I, what is our investor buy box? What are the main components of it?
Well, so Russ, today is gonna be a lot about what I would say my superpower is, and that's relationships, right? Relationships with an operator or relationships with whoever you're going to invest with are super important. But at the end of the day, that is not the end of your buy box, right? Relationship is great, but it can't be the end. And let me explain what I mean by that. We have people that you and I have gone very deep in relationship with over the last several years. We've been with them in events. We've done podcast interviews. We've done sidebar conversations. We've looked at their investments in detail. And we've spent the time building those relationships. But at the end of the day, if the investments that they offer do not create cash flow and create cash flow quickly, we're out, right? It does no hard feelings, right? We love you. We want to work with you, but it just isn't possible because the investment doesn't fit the buy box. Secondly, if there's not an opportunity for some sort of tax strategy, we're gonna be out unless there's something else that makes it just like a super win, right? Like maybe the cash flow is much higher, but there's no tax, depreciation model, whatever. And I think the last thing is we are looking for ways to have some sort of, influence, some way to see that it's not just a hope strategy. Appreciation is great, but it's always going to be one of the last things that we consider in our investing decision. What would you add to that or take away?
Well, with those three levers, cash flow, tax strategy, and appreciation is the lens that we evaluate all deals. And the relationship is the accelerator to those three, right? With no relationship, it makes it really hard for us to get involved. Relationships are good because it gives us confidence, or bad because it gives us false confidence.
That's
Right.
true.
I would say
100%.
some of the deals that we've lost money in was because we had relationships. But I do buy into the premise that if you're in a good deal with a bad partner, it's still going to be a bad deal. If you're in a bad deal with a good partner, you'll figure it out. So that's where relationships for me make sense, but making sure that it's deeper. There is some that I'm just not too invested in the relationship. It's not like that girlfriend or the girlfriend you thought you had, Joey, who lived out of town when you were in high school that you were telling all your friends about. Like in your head, she was real, but to all your friends, they were like, yeah, it's not really a real thing, man. So like, we got to be careful that it's actually a real deal and it's just not a one-sided.
Bro, I mean, who have you been talking to? Like, we didn't even know each other in high school. I mean, come on.
I know, I'm just busting you up, but everybody knows what we're talking about, right? Like we just got to make sure that we've got that down. So let's talk about from a cash flow perspective, why is it so important for you that if it doesn't cash flow in the first X period of time? Well, first, what is your criteria? How long are you willing to give it before it cash flows, before you say, hey, that's not the investment I would make?
Well, I'll say this. I think the longest that I have considered, and to be honest, I feel like I was making a poor choice in this matter, was almost 9 months, right? If it's beyond 9 months before we start to cash flow, to be honest, there's too much. Usually, what that means is there's too much of a speculation to the cash flow to begin with, right? That means that whatever the asset that I'm purchasing or the investment group is purchasing has to be stabilized either from increasing the rents, doing tons of renovations, whatever the case may be. And to me, that just leaves a variable that everybody has the intention of being a positive thing, but I would rather buy something that already has proven cash flow. And if it has a dip for a little bit, that's great, but at least have some sort of cash flow. I would say within the first quarter to 6 months is what I'm targeting. What
Can
about you?
well, let me play devil's advocate in this deal, right? This is me thinking out loud on this. But Joey, if you're doing that, that only means that you're coming in at the end of the game, right? Because every business has a ramp up period. Every business requires a time frame for it to stabilize. Doesn't matter how great it is, right? Name me a business that immediately starts cash flowing outside of the treasury printing presses, right? They all have a startup phase. So if you're only getting in deals that are going to produce cash flow immediately, you're getting in the deal at the end, meaning there's going to probably be very little, if any, appreciation opportunity for you. No upside because it's been given to somebody else. Or B, you're probably going to get a much reduced return because you are taking very little risk to get the deal. How would you respond to that?
What I would say is, first of all, as you get exposure to deals, there are plenty of deals out there that have some element of cash flow to them today that have a massive upside, that have like the ability for that. So that is a narrow focus for me. But I feel like that there is, and maybe it's just because my investor DNA is that S profile, like a steady, I like some consistency. If it doesn't already have cash flow of some sort, to me, that it doesn't create that position that I want to be in. I want to start to see that money trickling back, even at a small rate, so that I know that it's being properly managed and that it can then continue to increase from there.
Well,
I'm happy to be a part of the growth, but I also want to know that the asset is not like, I'm just not your guy that's going to go and do a flip deal. Like that to me doesn't
Yeah,
fit
but a
my.
flip deal, it doesn't have to be a flip deal. I mean, there's a lot of different, they're in the multifamily space example, right? Like a lot of deals where they're going to go acquire. It's going to take 6 to 9 months for them to maybe even close on the deal. And then once they close on it, they're going to take the capital that they've raised in order to renovate units, try to juice up occupancy. I mean, like, you see what I'm saying? Like, there's a lot of investments that we can get into. You do a car wash deal, you do a self-storage, you do a mobile home park. I mean, you're in the oil and gas space, maybe the industrial space. I mean, there's so many different spaces. Depending on when you're getting into the deal, they're raising capital. It's not like they close on the deal immediately. There's a ramp up period. So either you're getting in at the very end and they're like, okay, we need an extra, X dollars, and we're going to let these guys in because somebody had to be on the front end. So you're saying you're not going to be a front end person in order to do that. Or they're going to say, hey, we're going to go ahead and go buy a cash flowing property. This person is exiting. We're going to pay a premium to get it. And because of that, the returns are going to be a little bit lower. Am I hearing you saying that's the deals that you're okay with taking a less return just to go ahead and get cash flow from the beginning?
Yeah, and I would say this: there are definitely some deals that, so it would be a smaller percentage of the portfolio in my mind that I'm willing to allow that business model to play out over a longer period of time. But the vast majority of things I want to invest in are going to have some element of cash flow today. To be honest, there's way too many deals out there that meet that criteria. So I don't feel like I need to take the risk of the future speculative kind of, hey, this is going to work out if all these things play out. I'd rather pass on those deals or put a very small percentage of what I'm going to invest in those.
So I would say, though, I think that is one of the reasons why our passive income did not grow as much, is because we've held to those standards. And here's the thing: it's like insider, right? Like you want to see what's going on in Russ and Joey's brain. Let me tell you, right? Like let me pull it out and play with it, and I'll share. Ooh, take my brain out of my head. You're with me. Sorry about that. Earmuffs. I should have given earmuffs there. All right. The idea that we're sitting here thinking like we have so much access. There's all of these opportunities. Which one do we take advantage of? Which one do we do next? And a lot of times we just sit back and watch instead of do. And that's what happened in 2023 is we watched. Our criteria, I think, was so tight that there was not a lot of those opportunities out there that we took advantage of. And it's why we only grew our passive income 5.5%. And I mean, to be honest, like I think maybe I don't know if that's good or bad, but I do think that we sat back a lot trying to say, well, we can get a better cash flowing return than X. And we sat back waiting for it. And I think maybe we got distracted by the 2011 to 2022, like everything's a grand slam. And now no longer is that the case. And we're saying, hey, maybe that's not a big, huge win for us. The second thing, not to get too stuck on just cash flow, you said tax strategy. And I think most people know what you're talking about when you say there's something around the tax strategy part, but not everybody. Like when you say when we're analyzing for tax strategy, what are those big components in your mind that you're like, it has to have A, B, or C, or it must have something other great? What's A, B, and C? What are those things in there?
Well, before I jump into that, I want to mention one quick thing. I think another thing that kept you and I distracted was that we thought the next level for us in investing in 2023 was going to be building a fund. In fact, we've gone across the world explaining this is what we're going to do in 2023. And we invested in the education to figure out that that really wasn't the best use of our time, money, or energy. And it's not something that we were really built to do because we don't have the bandwidth to do that, number one. And number two, it was kind of like the juice isn't worth the squeeze, if you will. We just really figured that out. It took us a long time to do that. And I think that kind of had us on the sidelines. Would you agree or disagree with that?
I definitely thought we were going to build a fund, and it wasn't because we couldn't raise the money. We could
No.
totally do it. I think for us, the regulatory requirements behind the deal, like I'm comfortable raising money and going after deals. And if the deal doesn't work, we all lose together. Cause I would never raise money to something that I didn't have my own money in. Right. So like if I lose money, you lose money, we both bit the bullet. Right. But I think that it's just so much requirement. And we ask too many people in that world, how do you make that a passive business? We realize it's a business. How do you make it a passive business? How have you made it passive? And we never, 0 times out of however many times we asked the question, did we get back a response? Oh, I've made it passive by hiring A, B, C, D people. No, right. They were like, I work constantly in this business. And for us, that I think was the thing that just kept us pulled back saying, man,
yep.
I don't want to get mixed up in dealing with the SEC and FINRA and all the requirements that have to go in there because there's a lot of details. And I know that I'm not great with details. I'm going to fail in some detail, and I don't want to do that. But also it was the idea that we couldn't make it passive, and not that's okay, right? For it to be passive for you, it means it has to be active for somebody else, right? If you're going to invest in a deal, you want probably the person you're investing in to be super active. You want them to be involved. I think for you and I, that's the reason why we didn't do it. We've had plenty of people say, hey, how can I invest with you? How can I invest beside you? We probably left a lot of money on the table, but man, it just like our time is just worth more than any money that we can collect, I think.
Yeah. And I didn't want to get us derailed, but I wanted to add that point because I think it's important. First of all, we told you we were going to do that and we didn't. So there's a reason behind it. And just wanted to make sure that was clear. But to go back to the tax strategy question, for me, the investments, again, and it's in that order, like cash flow first, then tax strategy. If we can get both, it's just a winner sandwich, if you will, right? Is that a thing? Can I call it that?
You did.
I I'd love for, like, in the multifamily space, when people start doing these studies that allow us to take all of the depreciation in year one or maximize the depreciation in year one, the cost segregation analysis that they're done, that's an important piece. If I'm going to invest in one of those type of deals and that's not being done, I'm going to, first of all, question why. And then secondly, I'm probably going to, move on to a different
Well,
operator, because
I,
that's a missed opportunity, in my
Well,
opinion.
I would say you go through the cash flow quadrant, and in the E quadrant, it talks about the highest earners pay what percentage in income tax, roughly, Joey.
40%,
Okay, and then you move down into the S quadrant, the self-employed people. The highest earners pay how much?
like
And
50 or 60%.
right now, if you go over to the B quadrant, right, people who are working out of corporations, what's the highest earners in that category paying?
Roughly 20%, I think.
Yeah. In the I quadrant, people are paying zero, right? If they do
Exactly.
it right, therein lies the reason behind why tax strategy in investing becomes most important. If we can start getting the investments to produce passive income to us, getting cash flow from them, and we can reduce or eliminate or offset a portion or all of our active incomes that we have, now we actually work in the most efficient manner where we actually have more money to invest, creating more passive income streams. Eventually, if you're 100% in the I quadrant, you don't have to take any of that money. You can just borrow against it, right? Go get a line of credit against it. It's a loan. You never have to pay taxes. That's why they say they pay zero in taxes. It's because they end up never touching assets. They just borrow against the assets, and they put money in their pocket that is subject to loan, which is not subject to income tax rules, right? So
That's
there's
right.
reasons there. The appreciation side is the third thing that we put in there. It's not a deal breaker for us if it doesn't exist, but it has to have those first two criteria have to be so great that we wouldn't want it. Because if you can get some lumpy cash, right, you can get a 2x, 3x multiple on the deal on the back end. It just allows for us then to multiply what we're going to
Right.
do thereafter.
And
All right,
accelerate from there. Yeah.
let's talk about the second thing, which is, so we really hit on kind of our investment criteria decisions. And I don't think that's probably too different than what you expected from us, but we wanted to give a little meat around there because we're going to be making investments based upon that criteria here over the next month, actually. But the second thing is that maybe outside of the box, maybe you're one of those where in the 5 things that you need to do a deal, right? We talk about the motor, the redneck motor, the money, the opportunity, the time, the experience, the relationship. Maybe you got the odor, right? You're lacking in the motor, but you got the odor part, right? And one of the things that I think that for some that this is an opportunity, a real opportunity, is us bringing ideas to you that doesn't always require the money. And one of the things that we've been digging into for the last probably 6 months, really strong, is in the affiliate marketing space. And when sometimes people hear the affiliate marketing, they're like, wait a second, am I going to be doing a Tupperware party in my front, living room? No, that's not what we're talking about. We're not talking about Tupperware parties. But we are talking about there's people who've built products, right? Built courses, built groups, whatever it may be, that they're selling them, and they're looking for people who can help sell those products for them to their audience and get paid a commission, right? No different than if they have a sales force, they're paying you as a sales force.
That's right.
You're able to do that. And we've been building products for a number of years. We've had, hundreds, if not thousands of people purchase them. That goes on our passive income report every single month and our courses. But what we have not done well is go out there and find people to buy or to sell our products outside of our own community, nor have we aligned with too many opportunities where we could be an affiliate. So there's a criteria, though. People want to know, well, what's the criteria you're going to use if you're going to be an affiliate? What's ours, Joey? Everybody's going to have their own, but what's ours? What do you think the 3 big criteria that people should consider, and what did we consider within those?
So just to clarify, you're saying when we affiliate with other people's products, what are the reasons that we would do that?
Yeah, I think everybody needs to know what the big three is. Like if I'm going to
Yeah.
be an affiliate for somebody, what are the big three? We're using the same criteria.
Yeah. So number one, I got to believe in the product or service. I got to know that that product or service adds value to the people that I care about, like the
So,
people that God's entrusted to me to share this with. I need to make sure that the product itself, the service, is something that's going to add value to their life.
but also I would say even deeper than that. Like I definitely agree with that. If you don't believe in it, you're not going to sell it. But what you're really looking for there is a connection. There has to
Exactly.
be some connection to who you are and what you do. Otherwise, it's always going to feel odd. Like if I start selling, um, like supplemental, like health supplements on this podcast, you guys are gonna be like, that seems weird. I know, like Joey and I are very health conscious. We spend a lot of money on taking care of our health. I bet we between the two of us, we spent well over $100,000 this year on preventative things, not like surgeries, like stuff that we did in supplements, coaches that we have. True,
Yeah, I would say
easy.
so.
So, but if we start selling health supplements on this podcast, it's going to seem weird. It's just not connected.
Right.
So,
Exactly.
what would you say? So, the first step, you got to have connection. What would you say the next big block for people should be?
The second thing is if whoever is going to, I'm going to affiliate with, they need to have some sort of delivery system, right? A way in which they are providing that product or service in a reliable, consistent way. It's got to be easy to consume. It's got to have a result. Like there's some sort of, hey, do this, get this result. Do this, follow this process, get this result. If it's not, if it's just kind of like this willy nilly, like, oh yeah, just call me and we'll take care of them. That doesn't give me peace of mind that there's going to be a way that I can stand behind whatever they're talking about.
So, some sort of repeatable process,
Right.
whether and there's all sort of like if you start looking for places that you might affiliate with, look and ask questions like, "Hey, where does your course or group lie? Does it sit on Teachable or Udemy or Thinkific or Mighty Networks? Right? Is there some sort of delivery system that you've already pulled it together and I can connect to it? So do I have a connection to the product, and what does the delivery process system look like? What would you say the third thing is?
I think the last thing is there needs to be some sort of way to track the actual referral itself or that relationship. So if I'm going to be an affiliate and you say, "Hey, I'll just let you know if someone ever contacts us." Yeah, that's interesting. Interesting, but it's just not, it's got to be reliable, right? It's got to be some way that I know that people are connecting with that brand or that person and that they are then going to actually be giving credit to whoever has referred them. So that to me is important. What
Well,
would you add to that?
a reliable schedule, right? Like a detailed statement that's being presented. So what I would say is that if you're going to be an affiliate of somebody, have them show you an example of what one of their other affiliates is receiving. Like,
Yeah, or a
hey,
dashboard or
yeah,
something.
like
Yeah.
show me the dashboard. Hey, go ahead and you can block off the names, right? I don't need to see anybody's names, but show me an example of what your other affiliates are receiving to know that they just didn't start it, because you don't necessarily want to be the guinea pig. Otherwise, it may not work out well. So if you're looking to become an affiliate, what's the opportunity, Joey? What do you expect us in 2024 to create as far as passive income? What is your goal for us?
As far as what we're going to produce through affiliate income,
Yeah,
I think we can go past $1 million this year.
there you
What do you
go.
think?
Yeah, no, I believe so. And the reason why is not because we're just like saying, hey, I hope we'll do $1 million. Sound like a good number. Who doesn't like seven figures? Is that we invested 30 something, 40 something $1,000 in a company who has helped other people do this very thing, right? They had a process that they did. They actually helped us go through, create a criteria for who to hire, helped us go through the hiring process. Now we actually have hired an affiliate manager. So big thing for us, we didn't talk about this, but
Right.
big thing for us, everything has to happen, has to have an operator. If they don't have an operator, we're not going to do it. So we've actually gone and hired a manager to do that. So I say this just because when you see maybe an opportunity for you to get connected into something, Does it have a connection to what you're already doing? Does the person that you're affiliating with have a delivery system that you feel confident? Have you gone through it? Have you seen results, right? If Joey and I talk about a deal, one, we'll disclose that we're doing it, but two, rest assured that we're doing it. We're going through the process. And if we find out it's not working immediately, we will cancel. Like there's not enough money that we would get paid if we don't feel like it works. So we've talked about several things on this podcast, Land Geek, right? That Mark Podolsky is a proud sponsor of the What's What Wall Street show. Like you and I have built a $1 million land flipping business through that process. We've seen hundreds, if not thousands of people over the last 6 years in that process win. Happily love them as a sponsor. Neil Twa, their process with Voltage, helping you buy online and create online e-commerce businesses, building brands. We've seen members in our passive income mastermind who've built 8-figure e-commerce businesses by utilizing their exact model. Happily okay to affiliate with them. I could go on and on and on, but these are the examples that for us, did we do it or did someone close to us do that process and we saw it work out? We say, okay, great, we can get behind this. All right. So the first thing we talked about is that we wanted to make sure, what are the investment criteria that we're making? What's another strategy that we can be creating passive income, become an affiliate? So as we wrap up, this is kind of lightning round here, Joey. Let's talk about
hold on. Before you move on, I know we got to do lightning round, but if you want to become an affiliate of Wealth Without Wall Street, like you are a fan of Wealth Without Wall Street, you want to be a part of our growth and you want to, get a benefit from that, email us at info@wealthwithoutwallstreet.com because we are actively putting that system together right now and you will be the first one on the list. Reach out to us so we can see if you'd be a good fit. So info@wealthwithoutwallstreet.com. Just put affiliate in the subject line. So keep going, Russ. Sorry.
I love the plug, man. Shameless plug. You know that my low C wants to go fast. All right. Biggest win in 2023.
For me, it was finding an operator for 100unicorns.com to get Amazon business started. And man, we're about to hit the ground running in 2024. Look out. Russ is going to be shamed so hard in 2024. You're not going to want to miss that. And the second thing is we exited our short-term rental business. That to me was a huge win. We got to a point we said, we're not going to continue to grow from this unless we put in way more time, way more money, way more energy. And we were the bottleneck keeping it from growing. And we were able to hand that to our operator and still continue to get paid on that through a loan. Man, that to me is a huge win. What about you?
Trav, I'm never shocked that Joey puts 100 unicorns in front of something that was a 6-figure exit, that he is so deluded in his vision for these stupid unicorns. Oh my goodness.
You want to see a 6-figure exit? I'll show you a 7-figure exit. Okay.
The biggest win should have been you selling that thing 3 years ago, but okay. All right. for me, biggest win, I think, is figuring out all the things that we didn't want to do. To be honest, like there's so many things that we should have avoided starting in 2023, but there's a lot of things that we could have started that would have been a bigger disaster. I know that I'm not going to start any more businesses for my kids. They're going to have to start them. I had breakfast with one of them today, said, hey, where you at on buying that, getting me the business that we need to buy online? Oh, you hadn't done that? Okay, never mind. I know I could go buy that business tomorrow. I could do it. But the problem is that then it's my thing. It's not their thing. I tried that with the short-term rental business, didn't work. I tried that with the Turo business, didn't work. I'm not going into that process. So biggest win for me is figuring out all the things that I don't want to do because I like to do everything. So that was a huge win for me. All right, now let's talk about most excited in 2024 as we wrap up.
All right, for me, I'm excited that we have operators in place, that we have spent time getting to know, that we have intimate knowledge of their business model, what they're trying to accomplish. We are aligned with them, and that we're going to be able to deploy, $300,000 to $400,000 here very soon into their business models that are going to meet the criteria: cash flow and tax strategies and appreciation. I'm excited to see where that's going to run in 2024. How about yourself?
Well, I think that, you stole my thunder a second ago with this affiliate business, saying that we're going to make $1 million, and I too believe that that's an opportunity. I think we're going to get there, and the reason I believe we're going to get there is because we actually have hired an operator, somebody with success in their in their past, and we've built a model. We've taken almost 6 months to build this out, and we have the framework, so it's not a hope-based strategy. There's a lot of reliability behind what we've already done. So I do believe that in of itself will help us grow to 25% or greater, right? So I'm calling that we're going to grow 25% or greater in this passive income report over 2024. And we're making a lot of investment decisions based upon our criteria that we've talked about earlier. And we're making a lot of investments into this affiliate manager to not only affiliate our own courses and products that we've already built, but also to share the connections that we already have, kind of that vertical integration, and they all should align with what you're doing and what your journey is. And if we see a connection to help you become financially free, we're going to be adding those affiliate partners. So be on the lookout for that. Thank you for listening to this episode. I hope you found value as we talked about ways to grow as an investor, new ideas that help us, and making sure that they're aligned with who we are as investors so that you become financially free or get a lot closer in 2024. Have an amazing day.